Hey guys, welcome to the channel and welcome back to another video. On today's video, I want to talk about why you may want to add real estate to your investment portfolio. So today's video is going to be fairly short, but we're going to be rolling here pretty with a lot of information I want to give you guys. If you can hear me, give me a thumbs up, guys. Let me know that you can hear me okay. And I appreciate you being here, guys. Thank you, Ray, and thank you, Analog. This is exactly what I wanted to hear before Monday. Thanks from Utah. Got you, Analog. No problem, guys. If you can hear me, give me a thumbs up and let me know that you can hear me in the chat. And welcome in from LinkedIn, Facebook, Instagram, wherever you're at, guys. Appreciate you being here. Let's jump into this conversation. You may want to add real estate to your investment portfolio. Okay. According to various sources, guys, a significant percentage, when I say significant, I mean a lot, a whole lot. 90% of the world's millionaires own real estate, right? 90% of the world's millionaires own real estate, whether that means real estate, you're going to wholesale real estate, you're going to flip real estate, you're going to buy and hold real estate, doesn't matter. It's a big, big piece of an investment portfolio that you as an investor need to strongly consider. Hey, good to see you, Mind Elevation, AJ. Guys, let me know if you can hear me okay. If you can hear me, give me a thumbs up so that I know you can hear me okay. All right. And I'm still working. I'm still working over these. I'm still working on these overactive tear ducts. All right. So bear with me. Grayman's in the house, Philadelphia, Philly suburbs. Good to have you. So now here's the method of real estate that I like the most. The method of real estate I like the most is the buy and hold method. That's why I want to talk about why it's important or why you should strongly consider having income producing real estate, right? I was doing the Burr method before they even called it a Burr method when it comes to real estate. I bought my first piece of real estate, just to let you guys know if you're watching or if you're curious. I bought my first piece of real estate in 2000, the year 2000, towards the end of the year in 2000. And it was a single family property, 2-bedroom in a bad part of town. I had a squatter in the house. Had to finagle and work around the squatter. I bought it for $10,000, owner finance. The owner was kind enough to finance it for me. He was looking to get rid of some of his. He was a real estate agent, and he was looking to get rid of some of the properties he had. So I bird dogged, which means I canvassed neighborhoods, went to the courthouse and all that. There's no internet at this point. No, there's internet, but I'm not looking up real estate on the internet. And lo and behold, I ended up buying his house for $10,000. He put it on a 10-year note. I paid him like $150. Did that for a few months, and then I finally did some repairs to the property and got it ready to rent. That was my first piece of rental property. Over the next 5 or 6 years, I bought six more rental properties and held them for nearly a decade total. And now, since about 2015 or so, something like that, 15, I went ahead and got rid of a bunch of them, lost some of them for foreclosure, and made a bunch of mistakes. And now I'm down to 2, have had 2 for the last 10 years or so, 10 years. And that's what I got is 2 rental properties. I held these 2 for the longest and kept these 2 on purpose because they were some of the best ones I had. But so that's my foyer, my jump into real estate. And I've owned and managed my own pieces of real estate since the year 2000 for the last 25 years, depending on when you're watching this. So I want to talk about why real estate and what types of real estate, what types of income producing real estate is out there for you to think about. Let's see, Miss Moore, thank you for being here. Appreciate it. Thanks for the thumbs up, guys. Don't forget to hit the thumbs up. Hey, somebody from Milwaukee, good to have you as well. Listen, this is a pretty important video. Now, I've got a whole bunch of videos about real estate on this channel, on this YouTube channel, right? And I have a whole playlist. I think the playlist is 90 or 100 different videos. I used to do a lot of videos on real estate, and then I kind of start talking more about investments and so forth, or investments in terms of stock markets and ETFs and all that, and individual stocks and all that good stuff. But we talked a lot about real estate, income producing real estate, or just real estate in general, really, is absolutely one of the absolute best investments that you can make. Okay. So by the time I finish this, I want to make sure you guys understand exactly why you may want to add a piece of real estate or pieces of real estate to your investment portfolio. unless you already have it. And if you already have real estate, guys, let me know in the chat. Hey, I already own real estate. I'm a landlord. I've owned real estate for 10 years or whatever. Let me know in the chat below. I'm going to be checking that out. So in 2025 coming up, every person should be considering this as a piece of their investment portfolio. You got to diversify. You can't listen. Right now, as we speak, I would say about 35% of my net worth is in real estate. Okay. The other 65 is typically paper assets and things like that, cash, stocks, etc., equities, right? But there's nothing wrong with diversifying your portfolio, because if you're all in on, let me give you an example. 2022, if I was in both, right? 2022, the stock market S&P 500 was down by 18% that year, negative 18%, right? My real estate had jumped up 10 or 12%, 10, 12, 15% in some cases, right? So it's like when you have two things in two different pots, you're not going to be all crushed when the real estate market goes down, has a crash, because a crash is coming. I'm sorry, when the stock market has a crash, because a crash is coming in the stock market. If everything goes crazy in the real estate market, you're not going to be all messed up because you still have stocks and ETFs and index funds, whatever you got, right? So this sort of balance in your portfolio is really, really, really important for a lot of folks. And that's why it's important that you consider it, right? So first, we got low interest rates coming up. We talked about that last week, guys. The Fed has decided to go ahead and start cutting rates. And when the Fed starts cutting rates, what that means for us as consumers and investors, it means mortgage rates are going to be probably coming down soon as well, right? Mortgage rates come down soon as well. That's cool for us as investors, right? Despite the fact that they were going up. When they start coming down, mortgage rates are going to go down. So think about that as well in the next year or so, right? Another reason, or first reason is this. First big reason, that was just, we'll call this the second reason. High and rising demand for rental properties. More people rent rather than buy, especially nowadays. Investors, if you're an investor in an income-producing piece of real estate, you can sort of capitalize on this trend of more people wanting to rent than wanting to buy. And I don't think it's a mistake that more people are wanting to rent. I think that's by design, because I think we're going to look up. I won't be here in 30 or 40, 50 years. I may not be here, but guess what? In 40, 50 years, they're going to make a way, in my opinion, so that regular average individuals cannot own real estate. This is my opinion about America, okay? I'm not saying it's bad, good. It's whatever you consider it. But in 30, 40, 50 years, I think they're going to make a way where you won't be able to own real estate. They might grandfather you in if you already have some real estate. You got, 20, 30 houses or something. They might grandfather you. I don't know what it'll be. But I don't think it's by mistake that the demand for rentals is more than the demand for people that want to buy a home and own a home. I don't think they're in the business of the trend of individuals I'm not a conspiracy theorist. I don't believe that they're in the trend of making people big time owners more. I think they want to take some of that freedom stuff away from you. So just my opinion, right? But if you're talking about right now, a lot of people are wanting to rent. For an investor, an income producing piece of real estate gives you an opportunity to kind of capitalize on that trend, right? And you talk about younger generations, a lot of younger people don't want to own a home. So that's a demand for rental housing. That's an increase in demand for rental housing. And people are delaying their home ownership. 30, 40 years ago, people were 20, 22 years old trying to buy their first home and get married and all the good stuff, right? Nowadays, people don't want to do all that to the 30, 35 years old, right? Plus, not only you add on credit card debt, student loan debt, the desirability for mobility, right? Everybody wants to be mobile. They want to be a nomad, a traveling nomad, and vlog it on YouTube, right? All that makes rental properties more valuable, and investing in rental properties more valuable, whether it's multifamily, single family, duplexes, anybody. It makes it more valuable to become an owner of rental properties nowadays, right? Another reason is this. Real estate is a tangible asset. right? In other words, it's not some paper asset that you just fly by and, oh, well, on paper, I'm a million. No, it's a tangible thing that you can touch that has intrinsic value. It's physical. It's not like stocks and bonds, which are sort of abstract financial things that, on paper until you sell, right? No, real estate is real, right? You touch it, the land, the property, and in my opinion, that makes it a very, very stable investment that you can drive and you can see and you can touch and you can feel and you can actually. So in my opinion, that tangibility is very, very important for me. I like the fact that I can know that I have three homes that have value that I own, and it's not just on paper, right? Even when you got market volatility, real estate typically retains its value. Stock market goes up, down, up, down. But when you talk about real estate, like, yes, can real estate go down? Absolutely. But if you own a home for $200,000, the chances are very, very low that in 10 years from now, it's going to be worth $150,000. The chances are just really, really low, right? So real estate typically not only retains its value, but it also increases in value most times in most situations, right? Now, another reason that you may want to add real estate to your investment portfolio, especially income producing real estate, is a steady cash flow through rental income. And that could be commercial, could be residential, doesn't matter. When you're talking about generating a steady income stream from real estate through rental properties, that's a winner. That's a winner, chicken dinner, right? It doesn't matter if it's industrial properties, warehouses, whatever. Regular cash flow on income producing real estate is huge, right? While you got this stock market going up and down, and you're predicting and trying to guess when to get in and out and wondering if you should dollar cost average and put a chunk here and look, that whole time, you got rental money coming in, $1,000, $2,000, $3,000, $5,000 a month coming into you, right? Now, listen, it ain't easy. Get out of this idea that you think rental real estate is easy. It ain't easy. And I know people say it's passive income. It ain't passive, right? You got to do some work, whether you got to do some work to listen. I have rental properties. And if I don't have to do any work for 3 or 4, 6 months, 10 months, a year, great. But at some point, I'm going to be in that home fixing something or in that home doing something. And not to mention the fact that I'm collecting rents, not to mention the fact that if a tenant moves out, I got to go in there and spend some time, effort, energy, money on fixing it up. So it can feel passive, right? But it ain't altogether passive because you got to do some work to actually maintain it. First, you got to do work to get it ready. Then you got to do work to rent it out and get a proper tenant in there. Then you got to do work to manage the tenant if you manage your own property. Then you got to do some work to fix up. Now, you can have a property manager. Cool. But you got to if you got a property manager, you got to manage the property manager. You still got to pay attention to what the property manager is doing. You still got to think about, in terms of taxes. And so is it passive? Not altogether as much as passive as people think it is. Okay. But steady income is wonderful on an income producing piece of real estate. Now, I also know this real estate. A lot of people say real estate is not my cup of tea. I don't want to do real estate. I just want to own NVIDIA in an ETF and chill. And that's cool too, right? Everybody has their preferences. But my goal on this channel is to give you many different ways to earn money, many different ways to invest your money, many different ways to stack assets, right? Many different ways to increase your assets and lower your liabilities. And that's why this conversation is super duper important. Because you have to understand that you have options when it comes to investing. You're not just stuck with trying to pick and choose individual stocks. You're not just stuck trying to learn Forex or learn options trading or day trade. You're not just stuck with Bitcoin and gold, right? No, you're not just stuck with those things. There's a lot of different ways to earn and make and invest your money out here. And stock market, gold, crypto, Forex, commodities, those are some. But you cannot leave out the big kahuna, right? The big elephant in the room, which is real estate. And sometimes we look over real estate because we think real estate has such a high barrier of entry, right? Oh, you got to have $30,000, $60,000 to get a piece of real estate. Not necessarily. Not necessarily. Another reason that you might want to add in rental real estate or income producing real estate to your portfolio is appreciation. Appreciation. Over the long term, real estate properties tend to appreciate in value. Let me give you an example. The two houses I have now, I'll mention one of them. One house I purchased at the end of 2000, right? When I purchased that house, I did it on an assumption loan, right? But when I actually put a loan on that property, the first loan I put on that property was for $30,000 because the property was only worth $30,000, right? And if the property is only worth $30,000, then that was what, 2002, I think I put that next loan on it, 2002. I bought it in 2000, assumption loan, put it on in 2002, put another loan in 2002, and it was $30,000. The property was only worth $30,000. Today, the property is worth $140,000. Appreciation. That's more than almost fivefold, 4 to 5-fold over the course of 24 years. But listen, it stayed for a long time, especially during the 08, 09, 2010. It was still around 35, 45. I'm still kicking myself because there's properties right around this property, right? There's other houses right around it that I was this close to purchasing, and they were only 45, 50,000. But guess what? 10 years ago, I said, 50,000. You want $50,000 for that house? No way. But now all the houses are worth 130, 140, 120, 150, right? And I'm kicking myself because I could have bought 3 of them for 150, but I thought that was too much back then, right? So my thing about that is this: over the long term, real estate will appreciate. Typically, there's no guarantee in money, no guarantee in investments, right? But typically, real estate will appreciate. It may even have some short-term fluctuations, just like the stock market, right? You see real estate kind of go down a little bit. All right, most people are expecting a little bit of for it to go down right now. I don't think it's going to go down personally. But history, when I say history, I'm talking about 350 years of history in America shows a strong upward trend over time of real estate, right? Most real estate, you're talking about appreciation. That's an increase in your assets on the asset side of the net worth calculation, right? Again, this is why you may want to add this to your investment portfolio, folks. Don't sleep on real estate. Real estate is still an excellent investment. Let's see, we got in the chat. Somebody said, I feel like I'm stuck just day trading and investing in the stock market. Mind elevate. I feel like that because I don't have the capital to buy a rental property. Take some of that capital that you have, mind elevation. Start, day trade. But don't just look, I equivalate, I make day trading to me is sort of like flipping houses, right? It's really like flipping houses or even wholesaling houses. But you can take and skim off some of that capital over the course of 6 months, a year, 2 years, and save up $100, $300. Not just here and there, but save up $300. Make it a point to save up $1,000 a month. Put it to the side. Keep day trading with the rest if you want to day trade, right? I don't day trade, but if you want to day trade, cool. Just put some aside. But you don't have to get stuck in that whirlwind of day trading or options trading and things like that. There's other ways to make money out here. Somebody said, I definitely like real estate better than stocks. No abandoned homes on my street. Lots of families that take care of their properties. Yeah, and the beauty of owning rental real estate, good point, Jerome. The beauty of owning rental real estate is you choose who you put in the property. We still, as landlords, rental owners, property owners, whatever you want to call us, we still have the luxury of choosing who we want to put in the property. without, breaking any laws and being discriminatory in any way that's on the books in terms of laws. But at the same time, we have the ability to screen tenants. And if you have the ability to screen tenants, you can put in there who you want. You can buy property where you want. Good neighborhood, bad neighborhood, okay neighborhoods, So you've got options, right? Right? You've got options. If you really get into real estate, I'm going to go back to what someone said earlier. There's ways for what's called creative financing in real estate, right? One way I mentioned earlier was an assumption loan. I don't think assumption loans are even around anymore. And if you're in real estate, maybe you can tell me if assumption loans even exist. Assumption loans were loans where you don't have to, they don't go and check your credit or anything. You just take over the payments of somebody else, right? So I don't think they have those around anymore. But you can look, owner finance still exists here and there, right? You got to look, and you got to get out there and put in the work, right? Let's see here. Okay, another one is this. You're talking about financial independence. Real estate allows you, income producing real estate gives you another income stream for when you want to have your financial independence. Let's say that you want to retire early, right? Let's say you want to retire at 45, 50 years old, 40 years old, 35 years old, whatever. If you have income producing real estate, that's just another source of income for you. It's another income stream for you, which offers you the ability to have your financial independence. Let's say, let's break this down, because I know a lot of people that do this. If you only have 5 rental properties that are paid for, let's say you don't owe anything on them. Right now, we know rents increase. Let's say your 5 pieces of real estate, you're charging $1,200 a month for rents. And I know that may sound like a lot to some people, but this is nowadays, right? These same rental properties that you have, these 5 rental properties was only getting $700 or $800 for them 3 or 4 years ago. But now you're getting $1,200 a month. That's $6,000 a month, right? That's $72,000 a year. Well, let's take off some things. Let's take off, mortgages, let's take off taxes, insurance. Let's take off repairs. And let's say instead of $1,200 a month from each one of them, if you take off all the stuff that's due, the expenses, because I hate it when people that talk about real estate just give you the big numbers and they don't take off the maintenance and repair. They don't take off for empty the empty rate for the year, that it may be empty 1 or 2 months a year. They don't take off for the tax and insurance. So let's say you don't make a full $1,200 a month, even though you're asking $1,200 for rent for each one. Let's say that's more like, let's call it $800 a month after all taxes and insurance and all that stuff is paid and repairs, right? $800 a month for 5 properties is $4,000 a month. Listen, $4,000 a month take home after all expenses paid is about $48,000 a year. Right? Did I say that right? $4,000 a month times 12. That's about $4,000 a year. I'm sorry, a month. $4,800 a month. Here's my point. Let me get to my point, right? My point is this. That's a nice sum of money to have coming in without even having a job. You could live just on your rental properties alone, considering vacancy rates, considering maintenance and repair that you got to pay, and considering maybe even paying a property manager and having taxes and insurance. You could live on $4,000 a month. Let's say I'm wrong and it's $3,500 a month. A lot of people could live on having 5 rental properties that are paid for and bringing home $3,500 to $4,000 a month on each one after all expenses are paid, right? So this is sort of like, if you understand the game, you could retire early and chill on that money because you have tenants in there, right? Not to mention rents go up, right? They don't have to go up exponentially, right? But like they have in the last 2 or 3 years, but rents can go up, right? The value of the properties can go up, right? So this cash flow is huge. right? And it can really provide you a pathway to an early retirement or a more comfortable retirement if you got some rental properties. I don't plan to sell my rental properties. In fact, I may buy another piece of rental property in the next 2 or 3 years, right? And if I buy it, it'll be clear and free, right? I may buy a small apartment complex. I got options. I may buy a duplex, right? Whatever. But it can provide excellent passive, or not passive, but an excellent piece of income for you guys in your retirement or to get out of working sooner than later. All right. It's also, here's a big one that nobody thinks about, but I'm going to share it with you, okay? This is a big one that nobody really thinks about, but I'm going to share this one with you. Why you may want to add real estate to your investment portfolio is because real estate is a hedge against inflation, right? It's a hedge against inflation. Real estate has historically served as a hedge against inflation. Why? Because as the price of goods and services go up, inflation goes up and the price of everything goes up. Well, guess what? Your rental income goes up too, right? So when we saw think about what we saw just 2 years ago, right? In the summer of 2022, you had inflation, CPI headline inflation at 9.1%, highest it had been in 40 years. What do you think happened to rents? They went up too. Because as everything increases in price, not only do your groceries increase, but so does the price that it costs for me to have that repair person come out to your home. So does the price of property insurance. So does the price of insurance on the property goes up too. So when all that goes up, guess what property owners do and landlords have a right to do? Pass that cost on to tenants. Whether you like it, whether you don't like it, whether you think it's gouging or you don't think it's gouging, you think it's wrong, whatever. That's what happens. How you feel about it is not important. It's not really important in this conversation. Oh, I feel that's wrong. Listen, I get it. I know, I understand what you're saying, but I'm saying from an owner standpoint of investment property, I have a right to increase my rental Listen, my rental property that I told you about earlier, I charge $1,200 a month for it right now. 15 years ago, the rent was $700. 20 years ago, 24 years, 20, I'm going to say, I can't say 24. I can say 19 years ago because I lived in that house, but 19 years ago, the rent was like $600, right? Now the rent's $1,200. I probably could get $1,400 for it, but I don't because I don't like to price my rentals at the top of the market. I like to price my rentals so that they can be rented out and they're not sitting vacant for 3 or 4 months. So I price my rentals very competitively or a little bit under what the going rate is. So I just rented it out 7 months ago. I priced it at $1,200, right? Now I have another piece of property that I have a wonderful tenant in. They've been there for a long time. They've been there about 5 years. They're still at $950, right? They're at $950 because I don't want to necessarily raise their rent like that. I'll do it in very, very slow increments, but I don't want to just raise their rent just flat out, just because I'm a landlord or I'm a property owner, sort of understanding the whole business. And the whole business for me is not just to get as much rent. I'd rather have a wonderful tenant paying a little less than a horrible tenant paying a little more, right? So that's my take on it. That's how I kind of run my business in terms of rental properties. But the key is this: you can hedge against inflation because when the prices of everything goes up, so does the price that you charge. So does typically a lot of times property values go up too. So everything is going up, even though inflation is going up too, right? That's the hedge against inflation that income producing real estate offers you as a piece of investment in your investment portfolio, right? Not to mention, real estate is seen as a stable investment compared to stocks and other financial paper assets, etc. Right? A stable investment. During economic downturns, people still got to have a roof over their head. During economic downturns, people still got to have a place to live. Right? steady income flow, but also a wonderful, tangible asset for preserving your capital. Let me tell you let me explain what I'm saying. You buy 5 pieces of real estate, guess what happens? You pass away. Those 5 pieces of real estate, they can go to who you want them to go to. Do an estate plan, do a will, whatever you want to do in your state, you can pass that along. And you don't have to pass it along to a child. You can pass it along to a niece, a nephew, an uncle. You can pass it along to whoever you want to pass it along to. Capital preservation, preservation of your assets. You don't have to pass it along to one generation down. You can pass it along to your great-great-grandchild. And it can be in there as it can be a part of your estate that your great-great-grandchild can have when they get 30 years old. That piece of real estate, whatever. There's all different types of ways to preserve it, right? But it's all about capital preservation, generational wealth, right? Now, here's another one. Here's another reason you want to have real estate in your investment portfolio. Unlike stocks and bonds and ETFs and all that good stuff, you have no control over what happens to a stock. Zero. But with income producing real estate, guess what? If you're the owner of a piece of real estate, you got all kind of control over what happens to that piece of real estate. You get to directly influence whether that piece of real estate goes up in value based on improvements you decide to make or decide not to make, or goes down in value, depending on if you let the gutters hang off and the roof bit dilapidated and you put whoever you want to put bad tenants in the property is going to go down. That's on you, right? Some things you can't control, but if you say, okay, wait a minute, I'm going to get rid of this tenant, build this property up, maintain this, I'm going to change this, you get control over this piece of asset. Control that you don't have on a stock. You don't know what's going to happen to NVIDIA, right? So you get to control occupancy rates, the facilities, property management, and so forth on a piece of real estate, income producing real estate. This is a level of control that allows you to participate and actively participate in enhancing your tangible piece of investments profitability, right? You get to go in there and say, oh, that landlord or that property management was charging $1,000 a month. Let me make these improvements, XYZ, and now I'm going to charge $1,300 a month because of the capital improvements that I made on the piece of property. You got that control, right? Guys, do me a favor. Hit the thumbs up button for me. Check out my partner on this live, Mint Mobile. There's a link below. There's other free stuff in the description box below, but at least hit the thumbs up button for me. Right? Today's conversation is about why you want to add real estate to your investment portfolio. It's a wonderful investment. 90% of all millionaires on the planet own real estate. So you may want to consider putting it in there as a piece to what you have for all the reasons I'm mentioning here. I think I've mentioned 7 or 8 reasons, right? Guys, we got to hit that thumbs up button for me. Please hit that thumbs up. Thank you for mentioning that for me. Let's see here. Rhonda White is in here. Real estate with tenants. Your name sounds familiar. Real estate with tenants equals too much work, especially on repairs. Rhonda White, I like that comment. Thank you so much for that comment. Rhonda said, it seems like too much to do. I don't have time for all that. That's cool. Maybe you need to get a property manager. This is my suggestion to everybody. If you decide to buy income producing rental real estate, in my opinion, you should strongly consider managing the property yourself for the first year or two. Why? Because if you manage the property for yourself for the first year or two, then you get to the point where you understand what to look for in a property manager. You understand what it costs to replace a door. You understand what it costs to have a plumber come out and change a P-trap. You understand what it costs to have the HVAC repaired, right? You understand some of these costs. So when you go to have a property manager, you can better manage the property manager if you first have managed the property yourself. I hope that made sense, right? If you guys, by the way, if you have a question, put a Q in the chat. I'll more than likely jump into some questions here in just a bit. But I understand your sentiment about that, Rhonda White. you do have to listen, being a landlord and managing your own properties is not for everybody. Flat out. Let's just be honest with you and tell you that I'm going to tell you the truth. I'm not going to give you no fluff. I'm not going to try to give you hype something up that ain't hyped up. It's not for everybody. You may not want to do it, and that's okay. All right? If you listen, you have to, if you want to manage your own property, you may have to look in the eyes of a single mom of 4 and tell her this is not the property for you. Right? And there's a lot of people that just cannot have those tough conversations. And if you are the type of person that you cannot have those tough conversations, then maybe managing your own property is not for you. If you cannot handle somebody giving you a call at midnight and saying, I locked myself out, what do I do? The sink keeps running, what do I do? The toilet won't stop, what do I do? Or if you can't handle that and manage them yourself, maybe you either have somebody else manage it or you don't buy rental real estate. Let's just keep this 100. I don't want to get on here and tell you, oh, it's wonderful and you just do this. No, there's some issues and problems with being a landlord or managing your own piece of rental property or several pieces of rental property, right? But if you can handle it, it's one of the greatest pieces of investments that you'll ever make and add to your portfolio. And in my opinion, that's why you may want to consider adding real estate to your investment portfolio. Right? Here's another advantage of real estate, of owning real estate. People forget about this, but it allows you the opportunity of leverage. Right? This is one of the unique things with real estate is leverage. See, you can't take your $50,000 that you own in a stock and go and use that typically as some type of leverage, right? You can't typically. You could. There's instances and ways around that, but with rental real estate or income producing real estate or even real estate in general, even if you just owned a plot of land or whatever, right? You have the ability to say, oh, I own that land. The land is worth $75,000. Huh. Let me get an 80% loan on that. Let me get a $40,000 loan on that. Let me leverage that land, that piece of asset, to finance it, to now have $40,000 in my pocket because I leveraged the ownership of that land. Even if you have a piece of property that is worth $150,000, let's say you owe $30,000 on it, $120,000, you could go out and you can leverage that and get some type of mortgage on that, and you can put cash in your pocket to go buy other assets, right? So with real estate, you have the opportunity to leverage that real estate to get more money to go buy more stuff with that money. So to sort of amplify what you own, right? You're owning a piece of asset that you can leverage to go own more assets. Hey, real estate is like that. And as I said before, it adds some serious diversification to your investment portfolio, right? If you're only sitting on stocks and bonds and you're living in an apartment, you may consider, let me go ahead and start thinking about buying a piece of property. And you could do the simple, hey, buy a duplex, live on one side. Go buy it for 2 years at least, right? 2 to 3 years. Go buy another piece of property and another duplex, go live in it on one side, rent out the other side. Now, boom, go and just repeat that 3 times over the course of 6, 7, 8, 10 years. You got 5 or 6 doors in your investment portfolio. Please do this though. Let me give you this piece of caution. If you're trying to or thinking about adding real estate to your portfolio, please, please, please be careful and don't make one of the mistakes I made, which is I got caught up in that 2005, 2006, 2007, 2008, when you could buy a piece of rental property. They wasn't even really checking your background, right? Anybody could go buy it. So I got into real estate and I was collecting $5,000 or $6,000 worth of rent, but I was paying $4,500, $4,000 in mortgages, right? Because I bought wrong. I tried to over leverage and get into rental real estate with no money down or very little money down. And guess what? I'm bringing home $5,000 a month in rent, but I'm paying out $3,500 a month in mortgages. That leaves me only a $1,500 spread. Ooh, $200 a month, $300 a month. Ooh, sounds good. No, it ain't that good, right? because what happens when one tenant doesn't pay and one tenant has a major repair? You got to put in a water tank, a water system over here. And next thing you know, if you have no money, that little tiny $1,500 spread was gone. And I had to dig into to the money I was going to pay my own mortgage from to actually try to maintain, because I got in it wrong. Don't be very, very careful with this no money down stuff when it comes to real estate. It ain't all that it's cracked up to be. Leave a comment at the end of this and I can give you more. Again, I have 90 plus videos on a playlist here on YouTube. You can check it out. I talk about this all day long, right? In detail, right? So just be careful about that mistake. But real estate is good otherwise. If you can stomach some of these things I'm talking about, you can build up a little bit of cash to put down, you're good to go, right? It sort of has a low, okay, here's something else you got to think about. Real estate sort of has a low correlation to what's going on in the stock market. The real estate market kind of operates in some ways, not always, but in some ways on its own, right? I'll leave that right there. But it does act as sort of a stabilizer to all this volatility you see in the stock market, which I mentioned earlier. Now, another big one is this: tax benefits. Real estate investments, guys, they come with a number of tax advantages. First of all, let me say this: get yourself a good tax person, right? And consider if you buy individual pieces of real estate that you put that real estate in an LLC. You don't have to put it in an LLC, but it helps protect you if you put it in an LLC. Okay. And when I say put it, I don't mean take all 10 of them and put them in one LLC, because you leave 10 of them open, exposed to problems. Take your pieces of real estate that you buy. It's cost you $500 or $600, $700, maybe $100 if you do it yourself, to create an LLC for each one of your properties, right? But you get tax benefits. You can deduct mortgage interest. You can deduct the taxes. You can deduct some of the repairs this year, but some of the repairs have to be stretched out over, 27 and a half years or 29 and a half years, right? Not to mention your capital gains from real estate can be deferred, or they can be reduced through something like a 1031, right? I don't want to go into all that, but tax advantages are out there for you when you own properties. Again, this is why you want to add real estate to your investment portfolio. Do not sleep on it. Also, real estate is a wealth builder over time. Not only does income producing real estate provide income to you monthly, bi-weekly, however you set it up, but it appreciates over time, goes up in value. And again, you can pass it along to future generations. So real estate can contribute mightily to long-term wealth accumulation. Mightily to long-term wealth accumulation. Equity, right? Real estate equity. That's the difference between the value of the property and the amount that you owe on the property. The difference or the amount you owe on the property, the value of the property minus the amount you owe, take off any other liabilities, and then you have your equity, to be real specific. But your equity is very important. There's equity. That's the beauty of real estate, right? Another beauty of real estate is your personal use. Look, if you have a piece of real estate, you always have a roof over your head. You always have a place to stay. Your kids, your grandkids always have a home at some point if they need a place to stay, right? Everybody's family ain't perfect. You have problems and issues. If you really want to help out a family member, you got a piece of real estate, they can go live there. I know a lot of people do that, right? But it can serve your personal need just as a roof, right? For some people, it can serve as a need for a vacation home, a retirement home, right? And it can generate income when you ain't there. Think about it, right? And you have the control to live in the property, rent the property, sell the property, leverage the property, fix the property. You got all type of control. And that's what this channel is about here on YouTube, like you being empowered to have control over managing your money, making more money, investing more money, etc. Right? Real estate is that opportunity. This is why you want to add it to your investment portfolio or strongly consider it. And now there's several types of real estate. Art of War, thank you for the super chat. Appreciate you. Appreciate you. Appreciate you. Thank you so much for your support of the channel and being here for the channel. So I appreciate that super chat more than you know, guys. Thank you so much, Art of War in the house. What types of real estate are out there? Residential properties are out there, right? That's single family homes, right? Duplexes, triplexes, quadplexes, flats, whatever you call it. Multifamily apartments are out there. Listen, if you have everything in order, it's not out of the question for you to go buy a 20-unit multifamily apartment, an 80-unit multifamily apartment. Let me say this though: the more doors you have right in one place, it's going to make it more labor intensive. You got to understand that, right? You buy 80 units, you're going to have to hire a person on site, perhaps, maybe not. You're going to have to hire full-time maintenance, etc. Right? There's other challenges that come with multifamily properties, but then you got townhomes, condominiums, you got commercial real estate. Don't forget about commercial real estate, right? Where you rent to businesses as opposed to individuals, offices, retail space, all that, industrial office buildings or what have you, could be warehouses, whatever. There's all different types of real estate out there. You just don't have to jump into rental real estate to have a single family home. You're not tethered to that. You could buy, what do you call them? Not shopping centers. What do you call those shopping centers that are spread out? I forgot what you call them. Strip malls, right? Strip malls, all that. It's all open to you, right? It's all open to you. Don't think that you have to stay with one type of real estate. Plenty. You can buy a cabin, right? You can buy a cottage and rent it out, whatever, right? So there's all different types of real estate out there that is available for you. It could be Airbnb, right? You could buy a hotel. Who knows, right? Bed and breakfast are out there. If you go to a college town, student housing that's out there that you could purchase or get into, right? There's so many different variables in real estate. Do not believe for one moment that the only piece of real estate that you can purchase is a single family home, because that's not true. You could have a senior living facility or assisted living. You could turn a piece of single family rental property into a place for older adults, and you only have 2 people living there or whatever, with full-time care, whatever it could be. You can buy mobile homes. I'm not a fan of mobile homes for many reasons, but they're out there. You could buy storage facilities. I mean, listen, you can also buy land. You can buy a piece of land and you can rent out a spot on that land and you could put up a billboard and you could charge the person who wants to advertise on the billboard for a rental spot on your land. You can do that. When you see a billboard a lot of people don't think about this, but when you see a billboard, a lot of times the area right around the billboard is a piece of real estate that might be separate from the big real estate, but it might be a part of the big real estate. And when you allow people to advertise on that billboard that you see when you drive I-70, I-35, whatever you drive, a lot of times the owner of the land under the billboard is getting paid for the billboard sitting on that piece of. Listen, my point is this. There's all different types of real estate that you can purchase. I like income producing rental real estate, right? And if you don't like if you don't want to be involved in real estate, get you a REIT, real estate investment trust, right? A REIT is going to allow you as an investor to buy shares in a company that own or manage income producing properties. Maybe there's a company that owns strip malls all through America. You could buy into that company by purchasing a real estate investment trust, what's called a REIT, right? And they give out portions of their income to shareholders, just like, in terms of dividends, right? But that's a way you can invest in property if you don't want to, fix locks and answer to tenants, right? REITs. my point is that it is so huge in terms of owning and managing real estate. You want to get in the game, is all I'm trying to explain to you guys. You want to consider strongly getting in this game called real estate. Let me run over here to the chat, see what we got. Let's see here. What's the best beginner property? Single family home or duplex? Jimbo Slice asks. What's the best beginner property? Single family home or duplex? That depends. Do you want to have two doors in one property that have one roof, that may have, share landscaping, or do you want to have a single family home? Now, run the numbers. Duplexes are typically going to cost you more to buy than a single home in most parts of America. But at the same time, what are the rents? So there's a lot of variables to answer that question, Jimbo. I can't give you a point blank answer because we need to see the numbers on the properties that you're considering, right? Some would say, oh, make sure you get a duplex, right? But not necessarily, right? There could be some other, what type of single family could you get in the same area, right? So there's a lot of variables. I can't really answer that, Jimbo. It just depends on a lot of things, right? That have to do with the numbers. Let's see here. If we have any other questions, what are your thoughts on syndications? Syndications are cool. Syndications are when you have a group of folks that get together and all go in to get into a piece of property and all that. They're okay, not bad. You just got to be careful. You got to read the fine print. You got to know what you're getting into. I'm not a huge fan of large investments with partnerships necessarily all the time. Right? There's a lot of variables and a lot of things to think about. Always go through an attorney if you're thinking about a syndication. But syndications can be good. They can provide you some passive ways to get into real estate, more passive. But at the same time, you got to be careful. There's a lot of legalese, and make sure you understand and read the fine print if you're thinking about a syndication. I'm just not a big fan of them, right? But I've heard some good stories and I've heard some horror stories about syndications. Let's see here. REITs are the only thing in real estate that are passive, possibly. Let's see here. With a REIT, you can avoid the headaches of a rental property. Let's see here. Let me see if we got any questions. If I miss anything, put a Q in there. If I missed anything, guys, I can answer it because I'm at the end of the chat right now looking at it. Let's see. Mia from Atlanta. I have one rental property. It's paid for. I'm looking for one more. Right on. Memories in action. Mia, I appreciate that comment. Nothing wrong with that. Good piece of investment for your retirement. Absolutely. Let's see here. When you say house hacked, Jimbo, what are you saying by house hacked? There's several definitions of house hacked. Give me the one that you're speaking on real quick if you can. Let's see. Investment property. And let's see here. I'm just reading through the chats, guys. Bear with me. Okay. Let me go to the bottom of the chats. I will invest in REITs instead. Somebody said, what's your question? Mind elevation. Let's see. I have a few homes in Michigan, and my property manager does a great job. Excellent. Eastern Parkway, if you can find a good property manager, there's nothing wrong with having a property manager manage your property. Absolutely. I like that. Fantastic. Congratulations to you. Sometimes these management companies, they come and go, right? I mean, property management companies are as up and down, and they come and go just as fast as you get real estate agents, right? Remember the boom here a year ago, 2 years ago? Everybody was a real estate agent. Nowadays, those people that were real estate agents, they're no longer real estate agents, right? Same thing happens in the property management space. You get property management companies, some of them that have been around 10, 15 years, but you get a lot of them that are new, come on the scene, and they leave, right? They just can't do it, or they just come and go so fast, some of these property management companies. So if you can find a good one, excellent. Let's see, buy a three or four door property, live in part of it for a year, then move out after a year and rent it all. Yeah, no, I like that. I like that. If you can do that, let's see here, Jimbo, going back to your question, if I can find it, man. Let's see. I like the idea of house hacking, but you got to make sure you're not violating anything with an FHA loan. And I'm not sure about the particulars on the specifics and on the limitations and all of the laws and things that you can and cannot do with an FHA loan. Not sure about that. But just make sure you're following that, Jimbo, is what I'm saying, right? But I don't see anything wrong with the house hack. That's cool, right? That's cool if you want to do that. I have no problem with that, right? Move out after a year and rent it all out. That's cool, no problem. And I know people that house hack in that manner or have house hacked in that manner. So with a REIT, can I avoid the headaches that come with a rental property? Yes, you can. Absolutely. Can I kindly be your property manager? Listen, I thought about years ago becoming a property manager. I said, no way in the world I want to manage property. No way in the world. I don't want to do that full time as a business. Not at all. Nope, 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 nope. Can't do it. Yes, tax liens can be a good investment. Absolutely. Buy rental property on the courthouse. Make sure you do your due diligence as much as you can, though. Right? Here's what I tell people. Never buy the first piece of real estate that you see. Ever, ever, ever. Never buy the first piece of real estate you go out and look at. The first tax lien home you go see. You need to see a bunch of real estate to learn what to look for and to learn what you're looking at. So when you walk into a piece of property, you start evaluating the property when you're pulling up to the property. You can be so good that you look around the neighborhood. Okay, that looks like this. Let me go visit this neighborhood on a sunny day. Let me go look at this property when it's raining because I want to see what the roof looks like. Do I have to replace the roof? Is the grading around the house draining properly away from the house? Are the gutters and downspout? Are the gutters attached to the fascia? How's the soffit? Are the downspouts and the splash blocks heading away from the house properly? Is there cracks in the outside foundation? Again, all those things are things you look at as you walk up to the door. Is the door crooked? Are the windows crooked? What about the floors I walk on as soon as I walk in the house, right? What is that crack in the corner of the drywall telling me about the shifting of the foundation of the house, right? And you need to be able to look at all these things. Let me see those door jambs. I want to see if the door jams. Let's look at what the frames of the door. How is that looking? There's being some shifting in the house. Why do I keep saying shifting? Because the most important thing you always want to make sure in a piece of property is the foundation. It's going to cost you more money to correct a foundation than any other thing you're going to do, right? Foundation and roof, right? Foundation is huge. And so the foundation, you got to start looking at that from the first time you look at a piece of property is the foundation. How is it sitting? How is it shifting? Is it shifting? Is the basement leaking? Is the crawl space leaking? Whatever it's on, right? You got to know the foundation, period. Then you look at the roof. So I like to take a piece of property when I look at it, and I look at the bottom and the top, foundation and all around the foundation and the roof, because those are the two most expensive things on a piece of property, right? Then you go from there. I look under the roof. I look at gutters. I look at downspouts. I look at fascia, soffit. If there is fascia and soffit, depending on the build of the property, I look at all that stuff. Then we start looking at floors. We start looking at HVAC, knob and tube wiring, all that good stuff. But you learn all this after looking at several properties. You don't have all this information just by looking at your very first property. The more properties you look at, the more you learn what you like, don't like, can tolerate, can't tolerate, want to be, how to repair, how much to repair. All those things come into play, right? Let's see here. Is it a wise investment to take a HELOC to invest in a long-term paper asset? Maybe. Depends on your personal financial situation. If you have a $1.5 million net worth and you got a piece of property that you want to put a small HELOC on to go invest in something, that's different than if you have your own piece of property, your primary residence, and you take a HELOC out and you got $75,000 in credit card debt. That depends on your personal situation, Panama, if that makes any sense. Somebody said, Smart Money Bro, if your tenants have an issue, do they contact you directly? On average, how often do they have requests for repairs? Yes, they contact me directly, right? They give me a call or they send me a text because I manage my property and I'm on it, right? If you're going to be a property manager and you want to be good, listen, if you want to be a property manager, charge good premium rates for your rental properties, and you want to retain your tenants. That's I could do a whole video. As a matter of fact, I have done several videos on how to keep tenants, because the most important thing you'll ever do as as an owner of a piece of rental property, the absolute most important thing you do if you own income producing real estate, there's no question, hands down, I'm going to tell it to you flat out. the most important thing you will ever do is decide who you're going to put in your property. Because who you're going to put in your property can be the difference between $1,000 a month versus $75,000 in repair. The most important thing you're going to do is figure out who you're going to put in. So that's very important. Yes, they contact me directly, and I like to separate myself from other landlords or other property owners by being super duper fast to respond and to be very, very solid and good when it comes to managing the property. That's how I separate myself from other property owners. And typically, some will contact you often, some will never contact you. But you got to be careful with the ones that never contact you, because they could have a leaky sink and just don't want to bother you. And that leaky sink that was a $200 repair can turn into a $3,500 repair because they don't contact you. So be careful with the ones that don't contact you, because you don't want somebody that never contacts you, but everything is going wrong, right? So just got to think about that, right? Think about that, think about that, think about that. Okay. So excellent question. Thanks for asking that. I'm not going to be able to get to all the questions. I think we have others. Somebody mentioned the BRR method. Somebody mentioned the BRR method. I think, did I see that in there? Right? Let me see. Okay, there it is right there. What is the BRR method? Buy, Buy, rehab, rent, refinance, and repeat. Buy, rehab, rent, refinance, and repeat. I think that's BRR method, which is what I did with my first couple of properties. Bought it, rehabbed it, rented it out, but I think I refinanced it before I rented it out. But anyway, the point is that's all it is. It's just a method of buying property, which there was no name to it 25 years ago, but now there's a name to it. They call it BRRRR, 4 R's, right? All right, so here's what we got, guys. Listen, this is my plea to you. My plea to you is please consider real estate in your investment portfolio. I know you got ETFs. I know you got stocks, but please consider rental real estate. You'll help yourself tremendously. Refer back to this video, or refer to some of the other videos. The very first link in the description box is the link to my whole playlist of real estate stuff on this channel. Check it out. If you got a question, guys, do me a favor, leave me a comment. If you know somebody that's interested in buying real estate or interested in investing in real estate, please send the link to this video to them. And because this is the reasons, really, I talked about some things you got to be careful about, because I never like to give you guys a video of all positive, all great, all wonderful. Look, you got to look at all sides of this thing. There are risks involved with real estate, and you got to know that, right? Because I want you to be an informed investor, not just an excited investor, not just somebody who gets hyped up and pumped up and I'm excited. Yay, that's an emotion. I want you to not do any of this stuff with emotion. I want you to do this stuff with logic, right? So that's why I give you the good, the bad, the ugly, the wonderful, all in one video. So you can figure this thing out on your own and make an informed decision about whether or not you want to get into real estate or not, right? Listen, I hope I was able to give you guys some value on this quick video. If you got value, hit that thumbs up. If you're watching the replay, make sure you like the video, share it with your network of people. Check out the free stuff in the description box below. I appreciate you guys as always. Miss Moore, thanks for hanging in on the chat for me. Anderson, Validated, Panama Jack, appreciate you. Alvira, Jimbo, John, the Walla Mala, all you guys. Appreciate you guys. Mind Elevation for being in here and hanging in there with me. I was going to make this a super short video. Turned out to be a little longer video. I got another video coming out tomorrow I want you guys to see. It's really important, so be on the lookout for that. Listen, as always, guys, think real estate. Think real estate. The best person who's going to take care of the old you is the young you. Guys, take good care of yourself and take care of other people. Until the next video, peace.